G'day legends and welcome back to another video. This is by far the largest correction we have ever seen in the cryptocurrency market, resulting in over $19 billion in 24-hour liquidations and a correction that is 8 times larger than the COVID-19 crash, all happening in a matter of hours. In today's video, we are going to be discussing exactly what this correction means, what possible impact this crash has had on the macro projections for Bitcoin, how the short-term price is now developing and stabilizing after this crash, what the buyers will need to do to regain control, the key levels you should be paying attention to, the upcoming weekly candle close, and the total cryptocurrency and altcoin market. By the end of today's video, you'll have a detailed and well-rounded understanding of exactly what this correction means and what to expect next. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can go ahead and get access to all of this by joining the VIP channel by contacting us in the pinned comment of the free channel, contact our admin, or check out these links for more information. Without further ado, guys, let's dive on in. So, a very brutal day in the market, and just looking at that candle here, you can see the magnitude of really how aggressive that correction was. And by all means, this was a brutal correction. Just looking at a 4-hourly chart, you can see that within a span of 4 hours, Bitcoin dropped from 117,000 all the way down to 101,000. Not just Bitcoin. If we're taking a look at the total cryptocurrency market cap, we saw a ridiculous amount of money wiped off that. We saw billions and billions and billions, hundreds of billions. I think it was around $890 billion wiped off in the matter of a 1-day candle, which was equivalent to 8 times the size of the COVID crash. To put it in perspective, the COVID crash was around $110 billion. This was around $890 billion. Looking at the altcoin market, we saw a massive correction, bringing us back to where we were in June. So brutality across the board. We were discussing these charts. We were discussing the weekly candle close and the weekly chart. We were discussing this brutal correction and diving into the short term, discussing what we expect next. Do we expect the price to come lower? Do we anticipate a bounce, etc., etc.? And of course, discussing everything you need to know about the macro and short term. Let's start on the market data. 24-hour volume up a ridiculous amount here, $745 billion in volume. This is probably one of the largest days of volume I have ever seen. I've been in the crypto market we're coming on 10 years. This is insane stuff. 118% ups. We do have very high volume all around the board, even yesterday. And liquidations. This is the largest day of liquidations ever for Bitcoin, for the cryptocurrency market. $19 billion, up 2,500%. 16 billion coming from longs, 2.4 coming from shorts. Just looking at that breakdown here, 5 billion from Bitcoin, 4 billion from Ethereum, even some altcoins, Solana, Hype. We're talking billions to hundreds of millions. A brutal day, and I do want to give my condolences to anyone who got destroyed today. I've personally been in a situation like this with mass liquidations where I've been destroyed early in my trading career. It is kind of part of it. I think the biggest losses teaches you the most important lessons of risk management. And risk management, in essence, is there to protect you from unforeseen events. It is there to protect you from days where things happen that were unpredictable, because not everything in the market is predictable. We'll come back to that in a second. The DXY pushing upwards, of course, we had some news of Trump imposing tariffs in China. Definitely was one of the catalysts for this correction. We've talked about how potential interest rate reductions may slow down as a consequence to the Federal Reserve trying to balance stimulating the job market and, of course, managing inflation. The most likely scenario is that we do not see consecutive back-to-back interest rate reductions, but we have to wait and see how that inflation data comes out. We talked about how this may be a catalyst to push the market higher, but also could be a catalyst to actually drag the market down if inflation starts to trickle upwards as a consequence of the recent interest rate cut. So pay pretty close attention. The S&P 500 has taken a nosedive, just as the rest of the markets have, dropping from 6,800, that psychological resistance, rejecting from there perfectly, pushing back down 6,600. But the most important thing here is that we've actually come down to now retest and momentarily drop below this major uptrend. You can see this major uptrend in diagonal trend line. This is the initial sign of this uptrend ending. We're coming to an end of this uptrend. If we remain below this level, we could very well see this downtrend resume and continue into 6,250. And while we remain below this diagonal uptrend, that is what I'm watching for. So I'm not actually too bullish on the S&P 500 now. As you know, I've been scaling out of the S&P 500. We've been essentially assuming all these local tops were tops until they break out because of the risk of this uptrend breaking and resulting in a downtrend. So pay attention to that. We also have to understand that anytime we see significant moves as a result of news events or in conjunction with news events, we see a lot of emotion and a lot of volatility, and sometimes that can result in the price overextending in any direction. So we do have the chance for this to be eaten back upwards and the trend being defended, but we've seen an initial crack in the armor per se, and this is not a good sign for the actual trend itself. So pretty bearish there for the S&P 500. We'll come back to that in our next video. Let's go ahead and jump into Bitcoin now. Guys, we have so much to take a look at, really. There is just so much to be discussing. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support me making this content on a daily basis. You'll be trading on exchanges I use and I trust. And of course, guys, you'll get access to all those exclusive sign-up rewards and monthly bonuses. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Alright guys, let's go ahead and jump into it. Now, big video today, a lot to take a look at. Let's start by taking a look at the correction, just discussing it in general, what it means. Then we'll go over to the short term. Then we'll jump back to the macro charts, and then we'll move over to the altcoin market and total cryptocurrency market cap. So a little bit of a rundown of what we're discussing. So as you can see, brutal correction for Bitcoin. And we talked about how this may be potential top for Bitcoin. We've talked about the 4-year cycle. We gave you potential top dates. We discussed based on the probabilities that we were pretty much coming to the end of the cycle. There's a 30% chance this cycle breaks, and that still kind of remains. We're still in that top territory for Bitcoin. According to the 4-year cycle, the 6th of October, 2025 was the top point. That is something we discussed years ago. Coincidentally, we actually created a top on the 6th of October, 2025, and we saw a correction since. So again, whether or not that is the big market players, the big people who have a lot of influence over the market trying to make this come true and force the market in that direction to actually defend the 4-year cycle, 1064-day bar theory, whether or not is a big coincidence, it is kind of irrelevant. The fact of the matter is that 6th of October top, that top at 126,000 is a top for Bitcoin, and is a local top that we need to be paying attention to, whether or not we enter a macro downtrend or not. We have since seen a major correction. If we take a look at the short term very quickly, we've been discussing over the last few days that we've still got a lot of weakness of Bitcoin. We had, of course, the breakdown of the 50 EMA, the rally the breakdown into the 200 moving average and the retest of the major point of support at that $120,000 level, which we define as a major line in the sand for Bitcoin. If we were to break below here, it would tell us that the buyers are fully out of control and the sellers have stepped completely in control. With that, we annotated We've annotated various amounts of horizontal support. The first one, of course, was 117. The next one was 113 to 114 to 115 over here. And the last one being, of course, at 107 to 108 and $198,000 level. We have seen pretty much every single one of these support levels absolutely broken through as a result of immense volatility following the announcement of tariffs on China. Now, taking a look at this correction from a broader sense, this has resulted in some pretty catastrophic damages for the macro chart. First and foremost, we have lost the 120 to 121,000 support. Secondly, we are back under the line in the sand, which was the bullish confirmation at 118,000. And thirdly, we run the risk of a very bearish weekly candle close, breaking below the uptrend on the RSI, which is a 1 year long consolidation pattern, which may indicate further corrections downwards. So a lot is happening here for Bitcoin in regards to this major correction. Let's take a look at this major correction on the short term now and discuss the key levels Bitcoin will need to break above to attempt to regain control and why Bitcoin could still continue lower. So we're looking at the short term. I have to jump into a 30-minute chart. You can see we had this major sell-off and we've come back up to retest this horizontal level. Now, what is once prior support becomes future resistance. So you can see here, we had about a 2-week period of support. We came through, we held this point as resistance. We finally broke through that level at that 115 level. We saw a strong continuation upwards. We've come back up here to retest and we are rejecting since. So, as we can see here, we still have that downtrend in play for Bitcoin. If we cannot reclaim these horizontal levels of resistance, Bitcoin is very likely continuing lower. We could potentially even fill this entire wick downwards back into that sell side liquidity on the weekly, which is going to be that 98 to 100,000 level we have been discussing for quite some time. So we do still run the risk of further corrections for Bitcoin. And again, the trend is very much still downward trending, even with this large amount of volatility. For us to be confident the buyers reclaim control, we need to see a structural shift in the trend. So again, these prior lower highs we've been discussing, we need to see a structural shift, meaning one of these lower highs need to be taken out. At the moment, we can also be looking at earlier signs from these horizontal levels of resistance. So provided we remain underneath this 115,000 level, we are expecting the price to potentially come all the way back down to 108,000. If we lose 108,000, we may very well see sub $100,000 in the next week or two. That is a real risk for Bitcoin. So all in all, it is not looking very good in the short term. It is not looking very good on the higher time frame. The daily chart, it is not looking very good. It is going to be incredibly difficult to take a chart like this and turn the tone bullish, turn the narrative bullish, turn the perception bullish. It is going to be requiring a lot of bullish volume, and it will likely require a bullish catalyst to do that. So at the moment, this is brutal, and we will likely actually see this extend lower. What we have seen is a bounce that is perfectly normal. We're seeing some mean reversion. A lot of exchanges did actually go offline, Binance being the big one that went offline. A lot of exchanges index their market price to Binance. So when Binance actually goes offline, we do see a few other exchanges drop off. And of course, that actually perpetuated the volatility of this crash as it decreased the amount of market orders that were occurring or pending orders that were occurring, thinning out the market books, allowing for these more volatile and violent corrections. So I do not think this crash is marking the end of or the start of an upward reversal. I think we could see continuations lower. We are coming up to retest resistances, and those resistances are holding as a resistance, and we do have sell side liquidity that has been untapped. So very cautious moving into the new week. We'll discuss that now. Let's jump over to the weekly chart. So the weekly candle close runs the risk of a few things. Number one, we run the risk of a deviation setup, which is more or less confirmed. We run the risk of a bearish engulfing candle, which we are very close to doing. And we also run the risk of breaking down a 1 year long symmetrical triangle formation on the RSI. So let's talk through these points. The deviation setup will be simply a weekly candle close below 119.5. This will tell us essentially that the uptrend has ended for Bitcoin. We've had deviation from the range, buyers were unable to show enough demand above in these new highs to maintain the price. The sellers are back in control, sending us likely to sell side liquidity, which is represented by 100 to 98,000, a level which we just missed. Number 2, we can see, of course, a potential bearish engulfing candle forming. Of course, for that to develop and for that to actually confirm, we would need to see a weekly candle close below the opening price of the prior weekly candle, which sits at around $112,000. And number 3, we have got the symmetrical triangle pattern here for Bitcoin on the RSI. Again, this pattern has essentially developed from the start of 2025. We can see it has developed through its entire period of price action. It suggests that although the price action has been going upwards, momentum has been slightly decreasing, and we've actually seen consolidation in that. A drop below will massively surge bearish volatility, and we could see continuations lower for both the RSI and for Bitcoin. So a bearish sign there. This weekly candle close is very important, and whether or not Bitcoin is able to show enough demand from this push to get back up, hopefully above 115 is going to be the line in the sand. 118 is a major resistance. It is very likely the weekly candle could turn bearish and we could see continuations lower. As always, after periods of mass amounts of volatility, remember, this is an unprecedented scenario in the cryptocurrency market. So to be able to assume you'll be able to predict exactly what is going to happen on the short term next is quite, I would say, delusional. You have to take more of a step back and just watch the key levels, because with such amounts of volatility, it brings in more volume. Volatility begets volume, and with that volume, we see more rationality and we see more emotions in the market. And with that, we see generally more sporadic price action. So what we are watching are the key horizontal levels. Keep your eyes on those levels. Watch to see how Bitcoin reacts to these levels. While we remain under resistance, you have to assume the trend is bearish and we could see corrections back into these lower points of liquidity. If we break through these resistances, we are watching for new developed supports to then facilitate continuations higher. And we are watching very closely to how this price is going to stabilize moving into the upcoming weekly candle close. Now, the best case scenario for Bitcoin, this is going to be best case scenario for Bitcoin, is that we will see a breakout of the downtrend that has been developing from these highs. We can go ahead and draw that very simply in, but to even see that, we need to get above this 118K level. So again, 118K level was the line in the sand for a continuation to new all-time high. It is still going to be the line in the sand for us to see any sort of strong bullish reversal. Until then, even if we see continuations upwards, we run the risk of corrections back down. So it's not looking fantastic for Bitcoin. We have to wait and see how this volatility subsides and how the price action kind of finds its footing after what has been, I guess, an unprecedented event in the cryptocurrency market. Let's move on, guys. Let's take a look at the total cryptocurrency market cap. Now, the total cryptocurrency market cap is a very, very strong chart over here, and it's going to give us a really good picture of what to expect for Bitcoin and the rest of the market, as the total cryptocurrency market cap is a representation of the health of the cryptocurrency market. And to put simply, we have hope for crypto while we remain above this level of support, 3.65 trillion to 3.63 trillion. This is the line in the sand. If we drop below here, we confirm deviation, we see steeper corrections. It is simple as that, okay? If we maintain above here, you can see this has been a strong point of support since around July. It could facilitate bounces and continuations higher. However, if we do lose this level, it is very likely we will see corrections, and that was the top for the cryptocurrency market. Pay very close attention to that moving into the weekly candle close. As for the altcoin market, I mean, what is there really to say? The altcoin market got literally decimated. It got absolutely destroyed. I mean, I saw some altcoins that were down 85. I saw some that were down 95% in an hour. I mean, if that is not crazy, I don't know what is crazy. 95% down in an hour is mentally insane. Anyway, we saw I'm speechless. I'm literally speechless. We saw crazy moves at altcoin market. And I guess what we can say here for the altcoin market is that weekly resistance we were warning everyone about held as a resistance. I guess, maybe not everyone caught the correction down, but I think if anyone's been following me, they wouldn't have been expecting altcoin season. They wouldn't have been expecting the price to rally to brand new highs again. They would be trusting the charts, trusting resistance is resistance until it is not, and waiting to see that reaction. If you did, if you were able to forgo aping to altcoins, trusting, waiting for that weekly breakout to confirm altcoins are going higher, you would have avoided what has been the worst crash in cryptocurrency altcoin market history. And that crash took us all the way down to a $760 billion level altcoins. Again, what is there really to say after something like this? There's not much to say other than we need to wait to see how the market stabilizes, how the market is going to respond to this, right? If the market comes through, if people come in, they start showing aggressive buying, they show aggressive demand, and we reverse here, that's going to paint a very different picture, because remember, the market moves massively on the tone. It moves massively on perception. These are things that the market does actually consider, or people consider when they're deciding to trade. So we need to wait to see how that develops before just jumping in and, you know, getting your feet dirty with this massive volatility. So thank you for watching, guys. What an absolutely insane day. I'm still speechless. I really am. This is probably one of the, well, what is the most brutal day we've ever seen in cryptocurrency. And I guess all I can say is, again, I have empathy for people who have been wrecked in the past, of course. Who hasn't been wrecked in the past? I think everyone goes through a similar journey when it comes to becoming a professional trader, or when it comes just being in the cryptocurrency market in general. But we have to also be happy if we did follow the charts and trusted the TA and trusted what was expected, not our emotions, that we were able to be out of the market, in spot position, out of spot positions in USDT, in on the sidelines, or in short positions even, when this correction happens. So, you know, thanks for tuning in, guys. Have a fantastic rest of your day. We'll catch you guys on Monday for the weekly candle close, and we'll see you all then. Bye.